What is going on, investors? Hopefully you guys are doing well out there. Happy New Year. Merry Christmas. It's the end of 2023, and we're going to usher in 2024. And it's also time for the Fang Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major Fang stocks. This week we had a lot of news out of Apple and some key technical levels that we'll be watching as we kick off 2024 next week. But we're not going to waste any more of your time. Kick things off like we always do. Meta Platforms. So the week at 353, like a lot of stocks, didn't do a whole lot. Up fractionally over the last 5 days, but since this is the last day of the trading year, we'll take a look at Meta Platforms up 183% over the past year. Amazon, Meta, Booking, Uber, and others are topping Wedbush's 2024 stock pick list. So even though Meta is up over 180%, some analysts lining up believing 2024 equally as profitable. Now, moving on to Apple, start of the week at 193. This one down by about 0.5%. Shares of Apple year to date up 54%. as shares settled at $192.53. The company inked a $50 million deal, or excuse me, the ink is not dry, but apparently Apple looking at publishers to train generative AI models. That'll be the story for Apple. There's a number of stories as we head into next year with Apple, but one of the major stories is, can this company jump into the generative AI race like Microsoft, like Google, and like Meta to a certain degree as well? Now, the Apple Watch ban was the drama we were watching all week as it went into effect after President Joe Biden, I think, properly declined to veto that ban from taking place. Now, Apple went to court and filed an emergency motion against the watch ban. It was granted a pause by an appeals court, I believe in Washington, D.C. Apple can now begin to sell their devices again, and the company is mulling a long-term fix via a software update to get around the ban that, again, pending appeal, could eventually go back into place early next year. Now, interesting story here, as you had the former design chief of the iPhone, the original iPhone, Johnny Ive. He started his own Loveform design firm in the Silicon Valley, and now the current iPhone design chief is leaving the company to join Johnny Ive. Be very interesting to see those two, what they're able to come up with outside of this design firm. Sam Altman of OpenAI/Microsoft is rumored to be working with them on some kind of AI device. Moving on to Amazon, start of the week at 153.33. Again, down just fractionally, down about 1% on the week to finish the week. We'll call that 152. Year to date, shares of Amazon up 77%. Amazon Prime, even if you're paying for it, you're getting ads next month unless you pay an additional fee for ad streaming. We're seeing this is also a big story in 2024. We're obviously seeing with the struggles of Disney, Paramount, Warner Brothers. A lot of these streaming services just simply are not making any money. Amazon Prime also going to monetize via ads, again, unless you pay an additional $2.99 per month to avoid them. Now, Anthropic, which has seen investments from both Amazon and Google, I believe, is eyeing over $850 million in annualized revenue by the end of 2024. That is a big-time revenue number for a company that was essentially in startup mode just a year ago, and the company's final valuation is exceeding about $18 billion, which, again, if you're running close to $1 billion in annualized revenue, you're trading at 18 times sales. Certainly seems rich, but given the growth rate, maybe not. Moving on to Netflix, start of the week at $489.74. This one slid down by about 0.6%. Finished the week at $486.88. Year to date, like all these stocks, Netflix up big, up 65% year to date. Not a lot of news out of Netflix. Moving on to NVIDIA, start of the week at $493.33. This one hit the green button as it was up about 0.4% to finish the week at $495.22. Year to date, NVIDIA up just 246%. If it does it again next year, holy crap, hold on to your seat. The stock market's probably in for a great year. Now, NVIDIA gained as it unveiled GeForce RTX 4090D for China. This as the company continues to try to work around the different type of restrictions and import bans that were set forth by the United States. NVIDIA continues to work with not only the United States, but also developers to develop graphics cards that can be sold into the country of China. Other semiconductor news is you have Intel grabbing an Israeli grant for a chip plant. It came to the tune of $3.2 billion grant typically means, quote, free money, if you will, for a $25 billion chip facility. This all has me wondering as it relates to Intel, as the company also received a $300 million lithography system from ASM, which is the first of its kind. Intel getting its hand on the most state-of-the-art lithography machine on the market. What it has me thinking is things are going pretty well for Intel. Shares are up to about $50 per share. Over the past 5 years, they basically have gone nowhere, as that's about where the shares were 5 years ago. But I think the upside for Intel is if you start to break this company up. There is no real successful fabricator and designer of chips. This is why AMD and NVIDIA and others focus on designing the chips and TSM manufacturers. Intel's trying to do both. It's a difficult game to play. There's a reason why the chip industry kind of went separate in terms of design and manufacturing. But I think Intel's probably got enough IP that maybe they're going to be able to split going forward. Could make shares attractive. Moving on to Google, start of the week at 142.25. This one down about 1.8% on the day. Finished the week at 139.69. Year to date, shares of Alphabet up 56%. Now, the company is settling a $5 billion incognito mode privacy lawsuit, as apparently the tech giant misled consumers about their privacy protections when using private browsing incognito mode in Chrome. Apparently, it wasn't private, and now $5 billion later, maybe it is. Now, moving on to Microsoft, started the week at 375.69, basically flat on the week to finish the week at 376. Year to date, shares of the software giant up over 56%. Now, News Corp and other news outlets have held talks with OpenAI to license content. This obviously on the heels of many lawsuits coming from authors and others in the industry, including the New York Times suing Microsoft and OpenAI for copyright infringement. You guys know where I stand on these. If you're going to train large language models on news content, certainly copyrighted books, any kind of copyrighted material, I think those people should be compensated. Now, Microsoft AI's bet not priced in. That is according to Wedbush, maybe because they're getting a lot of this content copyright free, but certainly the chatbots are game changing. I think next year obviously is going to be a big software year. This 2023 was a big hardware year where you had NVIDIA, AMD, those types of companies really scaling up the hardware. Next year, you'll see the Microsofts, the Googles, the Salesforces, the ServiceNow, those types of companies really make a push into the software and squeeze more money out of those large corporates. And moving on to Tesla, start of the week at 253. This stock down about 2%, finished the week at 248.48. Year to date, shares of the electric car maker up just 130%. Elon Musk says that Tesla is likely to set up its first India manufacturing plant in a city I cannot pronounce. Now, Elon Musk, I think I misspoke there. Elon Musk did not say this, but all the rumors point to this company heading into the great country of India as the economy and certainly the manufacturing base. And certainly there's some tariffs and some taxes there that make it more sense to manufacture the cars directly in that country. Now, Tesla's adjacent business model should gain traction in 2024. If you follow our earnings analysis of Tesla that we do every 3 months, we'll have another one in about a month from now. We've been talking about that time and time again with Tesla as the margins and the revenues of the solar business and the energy storage business, those have started to look more impressive than the electric vehicle market. We'll see what happens next year. Now, senators call on Elon Musk to recall defective Tesla parts. Apparently, these senators are disturbed for apparent false and misleading representation. I've never seen a car be made without parts or parts of it recalled. Now, moving over to the technical segment of the show, the S&P 500 met a very common area of resistance. Talked about this on last week's show. First of all, you're hitting all-time highs. Also, you're hitting the top end of a technical resistance. Don't be surprised, honestly, in January, you get a little bit of pullback on the S&P 500. For those of you who've been sitting on the sidelines, or you had money market cash or whatever, and I wouldn't blame you. Look, if you're getting 5, 6, 7% or whatever in some kind of money market or REIT, I don't blame you, but you get these pullbacks. Those are your opportunities. What would actually be surprising to me is actually if you blast up through here. If you do, hold on to your hats. That rally could probably extend itself. Also, when we talked about Meta last week, made a beautiful, just a beautiful move to the upside, created a new higher high, new higher low. Again, don't be surprised. Meta starts pulling back. Don't be alarmed. Now, if you bought at these highs, kind of sucks, but you should get pullbacks in Meta. First area where it's interesting, it's probably down here at about 320. Apple also hitting a very logical area of resistance just over the previous highs. But from a technical perspective, you are making higher highs, higher lows. Don't be surprised if Apple makes a reversal down here about 180-ish. Would be a decent spot to pick up more shares of Apple. Moving on to Amazon. This one also hitting a little bit of resistance, but you are on really a beautifully defined uptrend on this one that has really seen very little deviation. In fact, the majority of the uptrend, you've kind of traded at the midpoint or higher. Complicating the situation we've talked about, you've got overhead resistance at like the 170, 180 level on Amazon. Until you push up into that, you got to expect that you'll have some pullbacks in shares of Amazon. Also, Netflix looking just sensational from a technical perspective. We flattened out our uptrend. We're still making higher highs. We're still making higher lows. Pullbacks in Netflix should be bought. Probably south of 400 would be excellent. Also, as it relates to NVIDIA, we're more or less going sideways here. Shares of the chipmaker have not been able to push higher than about $500 per share, but you get any pull downs to about 400. That's your moment to step in there. Also, Google looking very much like Netflix. You've had a shallowing out of the uptrend. You're still making higher highs, higher lows. You've met a logical area of resistance. Pullbacks in Google probably should be bought down here at about, we'll call that 130 or less. Microsoft's in kind of the weirdest spot. It's pushed to new highs. Now we're basically just consolidating sideways. For the whole month of December, you basically been at about $370 per share. Pullbacks all the way down to like 330, which obviously seems obvious right now, considering shares are 376, should be bought, but even maybe slightly higher than that, maybe here at about 340 should be bought, but a resumption in a rally will likely just continue to move those higher. Now, Tesla in the most interesting spot from a technical perspective. Longer term, we're basically long term, you're straight up in an air. Intermediate, you're basically sideways. Now, micro trend with Tesla, lower highs, lower lows. We were looking for a confirmation kind of push to the upside. You'd like to see for shares to get above 285, 290, even 300. You still wouldn't be late to the party. You could actually buy these at 300 with an idea that you're going to push to a new high, maybe up here at 350, 360, 370. A rejection here with Tesla. Not super alarming unless you break kind of the 200 level. Then it would confirm maybe this downtrend that is materializing is more or less intact. We'll see what happens with Tesla as we move into next year. It obviously is a slightly different position than the rest of these companies since they don't sell software, they don't sell ads, they primarily sell hard goods as it relates to manufacturing cars. Folks, that was the FANG Stock Recap Show and the last one for 2023, but you bet your dollar that we'll be back in 2024. I hope you all have a wonderful and a safe new year. Remember, you can have fun on New Year's, but you definitely want to be around for the day after. So get a ride if you drink. Don't get in a car with somebody that's been drinking too much. Watch yourself on the roads. If you're an old man like me, you're going to be in bed by about 9 o'clock and stay away from all the craziness. If you're a young guy or a young girl, have some fun. But again, be safe on New Year's. We want to see you again in 2024. Thanks for tuning in today. We'll be back again next week. Good luck with your investments.